Okay, so thanks again, Kathryn, for joining us today. I'm really excited to have this fireside chat with you. So just a bit of background about Kathryn. Kathryn is the global head of electronic trading at Cantor Fitzgerald. At Cantor, she launched the algorithmic trading suite called the Precision Algo Platform across asset classes, including equity, foreign exchange, and fixed income, and is now even expanding to cryptocurrencies. Kathryn joined Cantor Fitzgerald from JP Morgan, where she was the global head of algorithmic quantitative research. And she started at JP Morgan as the head of linear quantitative research in Asia, where she spent about 5 years before relocating to New York to take on the role as global head of algorithmic quantitative research. Um, and she graduated from Cornell University and Purdue University with a double degree in statistics and finance. Thanks, Kathryn. So, just
Thank
to kick
you.
things off, could you tell us a bit more about your educational background, and how you got into finance?
Yeah, so actually, by education, I'm more like a mathematician and statistician. So, because I got my degrees in math from undergrad, and then statistics from my graduate studies. So I'm more of a quant researcher by education. But when I graduated from Cornell with an MBA. I was hired by Deutsche Bank to work in their Hong Kong office as a program trader. So that's not only not related to quant research, but also it's a completely different field for me. So I yeah, at that time Deutsche Bank in Asia we did not have any algos. So every trade was done manually. So as a trader, like program trader, I don't know if anyone knows what is program trading. So I'll give a definition. So program trading is you're trading of a basket. So the basket has to be more than 20 or more names in it. And in Asia, because we have so many different markets, right? So we have, China, India, Pakistan, then Thailand, Korea, Taiwan, Singapore, Malaysia, Indonesia, right? Australia, all of that, and Japan. So the baskets can contain a lot of different names from different countries. And when we received those baskets, because we didn't have algos, we had to manually execute all of those names. So first, as a trader, you need to be very, your hand needs to move very fast because you need to trade all of those names at the same time. And because, markets move very quickly. If you don't trade fast, you miss the trading opportunity and the market condition change and, you will have a huge slippage. So that's one thing. And then second is you have to understand the different markets in Asia very well because they all have different market microstructures, and you have to understand those market microstructures in order to deliver best execution for your clients. So that's very complex due to a huge number of markets present in Asia Pacific region. And the third, you have to understand the different benchmarks that your clients pass on to you. So some instructions was VWAP, like try to execute the orders to beat the benchmark of a volume weighted average price. And some orders are with a POV instruction, and POV means a percentage of volume. So that means you need to execute the order as a percentage of the total market volume, right? So if the total market volume is 90,000 shares, and if the instruction is 1/3 of the volume, then you need to execute 30,000 shares if the market executed 90,000, right? So depending on the different benchmarks, you as a trader has to execute the orders differently. So with all of these requirements, it's a very complex landscape for a trader, especially a new trader. So that was my first job when I joined Deutsche Bank. So I did that for about 2 years, and then Deutsche Bank internally was looking for someone to, in Asia to start building the algorithms, execution algorithms for Asia Pacific region. So I raised my hand, and I went through a series of interviews with the global counterparties, and then I got the job. And so I moved from program trading to algorithmic trading, 2 years after I joined Deutsche Bank. So that's back in, I joined Deutsche Bank in 2004, and I moved to algorithmic trading in 2006. Uh, so that's how I started my electronic trading career. And so I've been doing that for now, 16 years. So I built the algo trading platform for Deutsche Bank in Asia, and then I moved down to JP Morgan in 2010. First as the Asia head of linear quant research in Hong Kong, and then in 2015 I was promoted to be the global head of linear quant algorithmic quant research at JP Morgan. And at that time, JP Morgan moved me from Asia to US in New York City. And then fast forward to 2017, summer of 2017, I jumped from JP Morgan to Cantor Fitzgerald because, they wanted to build the electronic trading platform, and not only in equities, which is the asset class that I focused on at Deutsche Bank and also at JP Morgan. But at Cantor, this mandate has expanded from equities to FX and fixed income, and now cryptocurrencies as well. So it's a truly cross-asset class platform. And also my role expanded as well from not just quant research, but also technology, product development, and sales and coverage. So it's a much more expanded role. And I've been with Cantor for 5 years and 2 months now. So it's been quite a journey. And now I'm into cryptocurrencies as well. And with the FTX, what happened in the crypto space the last couple of weeks, FTX, and now the ripple effect to Genesis Global and others. It's a really exciting space. It's nascent, it's the wild west, but it's also very exciting. And what happened the last couple of weeks, it doesn't really shake the fundamentals of the crypto space, and also the blockchain technology itself is very revolutionary. So I'm still a big believer in this space. So yeah, that's the summary of my career path. And yeah, I'm still learning new things every day. And as everyone know, there's never a dull day in the crypto space. So I just keep learning.
So how's your time and role separated between like traditional equities, fixed income, and cryptocurrencies?
So nowadays, because we have developed the equities, FX, and fixed income algos over the last 5 years. So those are in more like a maintenance mode, like BAU. So most of my time, like more than 70% of my time, is spent on crypto, and learning about the crypto ecosystem, and talking with custodians, talking with prime brokerage firms, serving the crypto space, and also, like sourcing market data, talking with market data providers, and also, talking with different venues. Like, there are centralized exchanges like the, FTX and FTX US, which are no longer available, filed for bankruptcy. But there are plenty of other centralized, crypto exchanges like Binance US, Gemini, Kraken, OKX, and Coinbase. And then there are some decentralized exchanges as well, like Uniswap and SushiSwap. So yeah, like I spend more time on the crypto space these days than on the traditional side.
Got it. I think I'm really curious to understand a bit more about how electronic trading and fixed income in particular works. Um, as a cohort, like I did share some reading material about like fixed income and trading, but I think what I'm fi I want to get a better handle of from you is like how an OTC market that's otherwise like ridden with inefficiencies, how you look at making it more efficient through electronic trading. How do you deal with the intricacies of it being quite a manual market overall?
Yeah, sure. That's a great question. So, in fact, when I was first building the electronic trading algos for Asian market, it was even similar to, even though those are regulated exchanges, um, and not OTC, but still like a lot of market microstructures and the characteristics of those instruments are similar to FX and fixed income. So um, they are very illiquid, they are fragmented, and also, there's not a lot of standardization, right? So in order to build, good algos, first the requirement is, you need to have a central limit order book, right? So that's where, your algos can actually see, what's the buyer interest, what's the seller interest, and where are the, bid and asks, and how, the depth of the book, layer that can tell you kind of what's the intrinsic value of a particular instrument, right? So you need a central limit order book. That's the first. And the second is that there needs to be some kind of a standardization of, market data, right? And the standardization of, quote and trade dissemination, protocol to your algos. So your algos can actually interact more efficiently with all of those markets and for all of those instruments. So in that sense, in the fixed income space, let's take U.S. Treasuries, U.S. government bonds as an example. So that's actually in comparison to corporate bonds and the munis, the government bonds, U.S. government bonds are the most standardized, right? So we have central limit order books, like from BrokerTag, from DealerWeb, from Nasdaq fixed income was already acquired by DealerWeb, so that's one family now, and we have Phoenix U.S. Treasuries, right? That's Phoenix UST is actually owned by Cantor Fitzgerald, and it's our well, not wholly owned affiliates because it's a public company. So there are public shareholders, but more than 50% of the shares are owned by Howard Lutnick, who is the CEO of BGC and Cantor Fitzgerald. So that's our affiliates. So our algos for U.S. Government bonds actually trade on all of these exchanges, including Phoenix UST, BrokerTag, and also DealerWeb. And now we're connecting to Liquidity Edge as well. So the idea is that, okay, you have all of those central limit order books, and you have the standardized market data dissemination protocol, and also you want to access as much liquidity as you can, right? So to deliver best executions for your clients, you need to be able to access all of those liquidities. The most important reason for us to access all of those liquidities is because the more liquidity you access, the less market impact you will have on the market, right? So for example, if you want to trade $30 million of 2-year, right? And you can execute it all on the Phoenix UST, but if you separate, like if you like break it down into multiple pieces and then go to BrokerTag as well as DealerWeb, then the market impact of that that $30 million of 2-year will be minimized because you are accessing different venues to different venues liquidities. So the undue market impact will be minimized, and you can execute in a more efficient manner, and you can deliver better execution for your clients. So that's the whole idea behind building execution algorithms for different asset classes and for different instruments. So yeah, like first to recap, the criteria for building electronic trading algos is central limit order book, and second is standardized market data dissemination mechanism, and the third is connectivity to different venues to maximize liquidity capture and minimize market impact.
Under what circumstances or at what point would you consider like revising the algo that you have in place for any
Yeah,
one
good
of the
question.
strategies? For example,
Yeah, that's actually a great question. So our refinement and optimization and improvement of the algos can never stop because all these market microstructures are evolving, right? It's dynamically evolving, and let's take an example in the equity space. Like we have 17 exchanges in the U.S. and we have 30 plus dark pools and we have a number of single dealer platforms. All of these venues, venues like they provide liquidity, and all of them are constantly making changes. Like for example, Nasdaq introduced a new order type, Mallow, right? And over the last few years, and then they keep changing the exchange rules, like for the closing auction they changed the closing auction mechanisms, like the cutoff time. They changed it in the last couple of years from 355 to 350, and they changed the frequency of imbalance feed dissemination from 5 seconds to 1 second. And then we have new ATSs, dark pools, introduced in the last year or so. Like there's Pure Stream, which just went live sometime this year. And then we have One Chronos also went live this summer. And so there are new venues, new order types, and like it's just and the new interaction, protocols. So our work will never be able to stop. Like you have to constantly follow the market rule changes and new venues, and to equip yourself with the latest information, and then make code changes in your algos to adapt to the new environment and new market structure, and also to tap into new liquidities with the newly introduced venues. So it's a nonstop work of the team in order to keep up with all the changes that are happening in the marketplace.
got it. Thank you.
Yeah, sure.
When you're making these, wait, go ahead, Liwen.
Thanks. I have a question about career. Like, I know there are a lot of MFE or PhD program for trading and quant finance, but how do you see those career opportunities to combine some tech and some general business about finance in the market right now?
Yeah, so actually, in the in electronic trading space or algo space in general, we actually really prefer candidates with a combination of skills, like technology and some quant research capabilities. Because the reason we want people with a technology background and a quant research background is because in order to build a good algo, first you need to understand the market microstructure, right? So, and there are so many data available, and I think in today's world there's an explosion of data, right? So there's no shortage of data. So we need these data scientists and the quant researchers to collect the data and study the data to find patterns, to find there are linear and nonlinear patterns, right? So we deploy machine learning and artificial intelligence techniques, but sometimes in fact traditional mathematical and statistical modeling techniques are very useful. Like not every single problem can be solved by AI machine learning. Like there's a hype of AI ML, but traditional mathematical statistical methodologies actually are most of the time can work very well already. So that's why to study the data, find patterns, and make development models. That's the first goal. So we need quant researchers and data scientists. But at the same time, we highly value the technological development, software development skills, because end of the day, in order to deliver or roll out algo into production, you need someone with Java or C++ programming skills to make those code development and then deploy them into production with the production grade level programming skills, and that will make sure that your design pattern is top notch, and your algo performance, like performance capacity and scalability of the code base is top notch as well. So it's a combination of these two skills are the most wanted, and sometimes we cannot find those candidates because not everyone can be good at both quant research and the software development skill. So we often find build two teams for algo development organization. So we have quant researchers, we have technologists, but we look for those combination of skills in order to have a good team.
Got you. So how do you think the finance knowledge, how important is finance for those two teams?
Oh, yes. Yeah. Thank you for the reminder. Actually, yeah, there's a third, part of the team as well. So that's the product development team. So there's quant researcher and technology team, and there's also the, product development team. And the product, development team, they are not really doing coding, right? It's not development, in the technology sense. And what they do is that they have this general knowledge of the market and the general knowledge of the financial services industry, and they look for market microstructure changes on the market. So for example, what is the spread of the stock, evolution of the spread, right? So over the last 10 years, the spread has been contracting, right? Like from 5-6 basis points, like for S&P 500, right? From 10 basis points all the way down to now like 5-6 basis points. And what is the closing auction volume percentage evolution? So over the last 10 years, the closing auction percentage of the daily volume has been increasing, right? From 3-4% 10 years ago to now like more like 8-10%, right? So this product development people, they need to understand the market microstructures. They need to have a general knowledge of finance and different asset classes like equity, FX, and the fixed income. They understand the market, and they work with the quant researchers and the technologists to build the algo. It's a integral part of the whole triangle relationship.
Got you. Thank you so much for the explanation.
Sure. Yeah, my pleasure.
I wanted to ask you another question about when you create algorithms, how do you really test their efficiency or applicability in the market given changing market regimes?
Yes. So
and
yeah,
prevent overfitting and things like that, because even for example the COVID situation, how would you work with algorithmic trading then?
Yes. Yeah. So we solved that problem by running perpetual A/B test, right? So it's not just A/B. We call it A/B test because it's easier to say, but we actually run perpetual many different versions in production. And so, for example, if we are going to introduce a new feature, or we're in a different regime, so this new feature probably will work better in the in the old environment, but in a new regime, you probably need to introduce some new features, right? So we constantly, our quant researchers constantly roll out, do research, and whenever there's a regime change, they capture those in the market data, right? So they introduce new signals, introduce new models, and then we'll start this new A/B test. And this A/B test will have this new signals, versus the previous, version of the algo or the previous version of the model. And then we run this in production for, a couple of weeks in parallel. And then we study, right? We look at the transaction cost analysis. We look at different metrics like, what is the VWAP slippage? What is the, arrival price slippage? and what is the close auction slippage, and also what is the reversion stats. Like when we reversion stats is defined as a statistics that looks at when at the point of execution, and what is the return profile of the particular instrument, right? So if after you buy, the price keeps dropping, that means that you are adversely selected, and your reversion stats will not look very good. But after you buy, if the price keeps rising, that means you have bought at a good level. So that that way reversion stats look good, right? So we look at all of these different metrics, and to gauge, okay, if the new signal or new model works better than the old one, or vice versa. And then we decide if we want to replace the A with B, or keep the A and remove the B from production forever, right? So, and then we keep doing this A, B, C, D, E, F, like it's a perpetual production testing, and with any new signals getting a smaller slice of the production flow, so that you can always reverse to your previous version if the new version doesn't work. But we change that percentage from lower to higher if the B version new version actually works better. So it's always a perpetual test of new features and new market using new market data to adjust our algos, in a sense, forever.
So I'm wondering how frequently you will have a new version of that, or are you always working on a new version, and whenever you got a new one, you just do the compare test?
Yes, yeah. So it's the frequency depends on the complexity of the new model, right? So sometimes we can introduce a new model or new signal fairly quickly if it's not very complex. But sometimes it takes a couple months to a few months if it's a very complex. And also we have model review team as well. So even if you introduce a new signal or new model, it doesn't mean that you can immediately put that new one into production. We need other team to vet your new signal and your new model to make sure it's actually going to work, right? So that's the frequency part. And then in terms of how fast we can put a vetted model and signal into production, that's usually very quick. And we do it. We ask the development technology team to put it, code it, and then we have the UAT environment, user acceptance testing environment, where our QA engineers, quality assurance engineers, will test the code in the UAT environment and make sure it will work and not introduce new bugs or anything bad. And then we'll put this into a small flow rollout in production and test it with the older version. And then this this whole cycle goes on time after time.
Got you. Thank you.
Sure.
What inspires you to update a model and how do you think of something as significant enough in the market to want to put it into a model?
Oh, good question. Yes. Actually, it's not really what happens on the market that trigger us to, develop a new model. That obviously happens, right? So with the new newly introduced closing auction mechanisms by NASDAQ or NYSE, obviously we need a new model to adjust to that. Yeah, so that's one of the many triggers. And oftentimes it's not that. It's more like our quant research team, they constantly study the data, and they constantly study, like product managers, they constantly look for like a change in the market microstructure, right? So with all of those studies and observations, we try to come up with something new that will help improve the algo performance. So like with all of those studies, and the end result is often a new model or new signal. And then we put them into our A/B test experimentational framework, and then keep learning them in the production environment to see if we actually came up with something better, right? Sometimes it's better, sometimes it's not. So we cannot guarantee we always come up with something that's better than what's already in production. But it's the constant study and the constant results of the study that will propel us to always find something new. And sometimes we find something better, and then that will improve our performance. So it's I think Christine and Li Wen both asked this question before, like how often we do this A/B test, and how like is there a end of our fine-tuning process? So yeah, it's there's no stop of the fine-tuning process, and we constantly try to improve the performance, and study the data, and study the market microstructure. And yeah, it's like that's why it's exciting to work in this space, because market microstructure is keeps evolving, and it's you never will find yourself in a state that, oh, okay, I'm done, I can be complacent now, I can just go travel for 2 weeks, and then when I come back, my algos will still be working good, working well. So obviously 2 weeks may be okay, but it's just a constantly evolving space. So we cannot get complacent.
And what does like a day-to-day look like in your seat, given that you have to be constantly like updating things? It seems like there's a lot of research involved. What other components of your day are?
Yeah. So myself, I myself do not do a lot of quant research anymore. I used to be a quant researcher at Deutsche Bank and JP Morgan, but nowadays, because I'm more in the management role, so I have to oversee the whole team, and I have to talk with I need to talk with our clients to understand firsthand what they want, right? So what will meet their requirements better, so I can come back and talk with my quant researchers and my technologists and my product people to develop the algos that suit our clients' needs. And also I need to talk with our compliance and legal department to make sure that when we introduce something new, we get proper approvals from those departments. And I also run this Cantor algo committee. Not that I run, like I'm part of that Cantor algo committee, and it consists of a lot of people. Like our COO is part of that, and it consists of compliance, the legal, even tax department and technology and quant research, and myself, and everyone needs to approve a new feature, or a new algo or a new venue in order for this to go into production, right? So my day has a certain part of that as well. And then also obviously I need to study new new asset class for algo development. So these days I spend a lot of time on crypto because we're in the process of developing the algos for crypto asset class. So I need to talk with the custodians in the crypto space, the prime brokers, and the market data providers, and the exchanges. So yeah, so right now, if you ask like a breakdown of my day, is more like 70% like crypto, with all of those different counterparties. I need to engage them, talk to them, understand what's going on in this space. Oh, and also a big element of that is risk, right? To understand the risk in the space, right? So like cold storage versus hot and warm, and also like insurance policies of these different counterparties, right? If we park our assets in the exchange or in the custodian, like are they really kept in cold storage? And what if I want to trade those assets? And how fast can those assets be transferred from custodian to to the exchange, and then I can start trading them, right? So all of this technical aspect, risk aspect, and all of this needs to be understood and taking into account. And insurance policy, right? So what if the exchange or custodian got hacked? If they are not using cold storage, and what if they lose their hardware? Like even cold storage can have risk, right? So what's the insurance policy? Can I get 90% of my assets back? And maybe I will lose everything, right? Like with FTX, their user agreement actually has no insurance for their user. Like they clearly said in their user agreement that if we lose your assets, it's not insured. You will lose your assets forever, right? So if I take a look at that user agreement, I would never sign that. But I guess a lot of retail investors, they just didn't look at the agreement very clearly, very carefully. So clearly a lot of users got hurt in this process. So yeah, for me, I need to understand all of that. So that's the 70% of my day, and then the rest of 30% is divided into the FX, equities, and fixed income side, and talking with compliance, and also those counterparties like BrokerTag or Nasdaq, and keep myself abreast of new developments, new market microstructure changes in those space as well. And then I guess I need to talk with my team as well. Do team building, right? So yeah, that's why my day usually doesn't end with 8 hours. Usually it's 10 hours or even 12 hours because there's just not enough time. I need to make sure my team is being taken good care of. And yeah, and now it's the end of the year. We need to do the year-end review and write performance evaluations and stuff. So yeah, it's my day is full of different activities. I'm wearing different hats. Like like in the morning it's a crypto hat, or maybe afternoon it's a fixed income or equity hat or team hat. So it's yeah, very, very busy every day.
Speaking of like team building and also just like performance reviews, what tips would you give to somebody like more younger on about really building their brand at the workplace? What have you noticed from supervising people that really stood out to you that maybe each of us can work on building in terms of skill set or like soft or hard skills even?
Yeah. So for team building, I think okay, so two folds. I would say the first, in order to be a very good manager or leader, you need to be I would say that at least my style is I try to listen to everyone's concerns, and I have an open door policy, and I encourage anyone who has any concerns to come talk to me before it becomes a bigger issue, right? So I think that for me is a very important trait of a good manager and good leader, and it has been working for me very well over the last number of years. Um, and also not only having the open door policy and encourage people to come to you with any issues, and making sure there's no retaliation, and also I would say approach your team members if you observe something like we everyone has some hunch, right? So if you think that if you observe something like not abnormal, but something unusual that might be going on within the team, you can approach that person like proactively as well, not just waiting for them to come to you, because someone may be very introvert or maybe very shy, and they will never come to you, right? So if you observe something that deserves a conversation, I always try to approach the person with like, let's grab coffee, and it doesn't necessarily have to be in the office. Outside it probably will be better environment for a person to open up and talk more freely and more open style. So that's that works for me very well. And then the other side, you mentioned, what makes a team member stand out. I would say, one thing is, do your job, very well. So if you deliver your work, assignment always very well and always with high quality, you will be, noticed by your manager for sure. So I think that's a default that, you need to be performant in your role and make sure you deliver everything, not everything. Sometimes, if a assignment is very difficult and it deserves a team discussion and, maybe even, like a longer timeline to deliver, as long as we can make a case to make the delivery schedule longer. I think that's totally fine. You don't have to kill yourself to deliver everything within the time frame that you agreed at first with your manager. Sometimes it may turn out there are some uncontrollable external factors that you have to delay it and or have a longer delivery schedule. That's totally understandable, and that's also a skill that everyone needs to develop, right? So to have that tough conversation with your manager or with your peers, that the tough conversation skill, that's a very good skill to have. And so we talked about having tough conversations, and and we talked about like deliver on like with high quality, and with a with good handle of your assignments. And I would say also another thing is don't be afraid of stepping out of your comfort zone. So for example, you may be already really excellent at what you do, and you always finish your assignment ahead of time with high quality and all of those with flying colors. So maybe it's time for you to like ask for more tough assignments, right? Or even proactively come up with something new, some project that you can suggest, recommend to your managers, like maybe we should be doing this, right, in addition to what we are already doing. Maybe this will help our team stand out among other teams, right? Like your manager's manager may be impressed even by some like taking the initiative to come up with newer projects and stepping out of your comfort zone to do something completely orthogonal to what your skill set is good at, right? So I think that's a important skill to have. And also, I would say, last but not the least, is like don't be afraid of like like speak up and grabbing the opportunities, right? So like for me, one example that I can share was that when I was working at Deutsche Bank and I was a program trader, right? I was doing manual trade day in and day out, and it was very tough. So when the time came that the internal management was looking for someone to head up and start the algorithmic trading development team, they were looking for someone in Asia who has trading background, understanding of the trading, microstructure, but also have some, like quantitative research skills and the programming skills. So I thought about it. I was like, okay, I have all of these skills. So should I, raise my hand? So, eventually I raised my hand and I passed all the interviews and I got the job. So my point is that, most of the time, Asians or like women in general, we like to, evaluate ourselves in a very harsh way, right? So if we know 80% of the job description, we will say, we will hesitate, right? Oh, I only know 80%. What about those 20%? Maybe I'm not so qualified for the job. But for a man, I would I would like to argue that if they know 80%, they will already they will definitely raise their hand. I would say that if they know 50%, they will raise their hand, right? So I think I think it's really the difference between men and women, right? So we like to be more critical of ourselves, and we treat ourselves very harshly. Like, maybe 80% is not good enough. But in comparison, men are more like, they are very confident, right? They think they can learn the other 50% on the job. So yeah, we just need to, as a woman, I'm not saying that every woman is like that, but I was like that before. And I had a few days of struggle, like, I know 80%, 90%, should I, raise my hand? But eventually I conquered my inner self, like the obstacles, and I raised my hand. I got a job, and now I'm, more. I'm more and more confident, and so I think it's just a very good skill to have for us in general.
We're nearing up the close to like the end of the session. I was wondering if anybody else has questions.
Yeah, I would like to just add another thing is build your own like self brand, right? So everyone needs to, yeah, like, I'm not saying that labeling someone is a good thing. It's not good, right? So we shouldn't do that. But but coming from yourself, I think it's a good thing. Like you need to, build your self brand. So you might be the go-to person for quant research. You might be the go-to person for, development. You might be the go-to person for market microstructures. You might be the go-to person for fixed income or FX or equity, right? So, when you build that self-brand, you become almost like a expert in a certain area, right? So people will always remember you when they have a question or problem in that area, and then you are the first person that jump into their head. So that's always a good thing. So yeah, I think you don't have to be expert in many different things. Just a certain area, even just a small area, that's already good enough. Yeah, so that's just I just want to add that one more point.
Yeah, I think that's a really good point. I think being a go-to person for something, which is really difficult, but it definitely anchors you in the workplace and makes you known and recognized even by everybody else. But
Yeah, absolutely. Yeah, I remember I read that book many years ago. I think it was more than 10 years ago. Lean In, right, by Sheryl Sandberg.
yeah,
Yeah, she was, yeah. So that was the book that it really encouraged me to raise my hand to many different opportunities. Sometimes you get it, sometimes you don't. But if you don't raise your hand, you probably will not get it. So you have a higher chance not getting it, right? So especially if it's a high profile opportunity and many people are, like raising their hand to get it. And if you don't raise your hand, then it's a very low chance that you can get that job. So yeah, so I encourage every one of us to think about that. And yeah, if it's a good opportunity and you like it, certainly, you should certainly raise your hand.
that's a very positive note to conclude on. Does anybody have any final questions? If not, Kathryn, thank you so much for shedding light on so many different pillars of electronic trading today, right from how it works in fixed income to cryptocurrencies, how you come up with ideas, to how you monitor those ideas, to even like how navigating workplace and really building your own brand works. Thanks for shedding light on all those aspects. It was
Yeah.
really insightful to hear from you and very inspirational as well.
Thank you. Yeah, it's my pleasure, and thank you for inviting me to this forum. And I'm glad to meet you and a few other women, and all great questions. And I wish you all successful career. And yeah, we'll talk soon.
Yeah. Thank you so much, Kathryn.
Thank you so
Thank
much.
you. Thank
Thank
you.
you.
Yeah, have a good one. Bye bye.
Bye.